Well, a day after we received a surprisingly strong read on the economy, new figures suggest challenges lie ahead. SBS Finance editor Ricardo Goncalves joins us now. Well, yesterday, the Treasurer said that there was a broad recovery in the economy. Ricardo, isn't that the case?
Well, Anton, yesterday's GDP result was backward-looking, meaning it was for the first 3 months of this year. But current data suggests the economy may be stalling. So let's start with retail sales, which came in below market expectations at just over $24 billion in April. That's unchanged from the previous month and is disappointing given the February interest rate cut. While consumers are spending more on furniture, clothing and restaurant services, they're spending less on liquor, footwear and recreational goods. Now, even more concerning is a widening in Australia's trade balance, with the deficit blowing out to a record high of $3.9 billion in April. It means we're importing more than we're exporting. Now, that's had a negative effect on the Australian dollar, which is currently weaker against the US and down across the other major global currencies. But here is some good news, and for some people that need it most, farmers. Australian wool prices have surged to a 4-year high. Oh, look at the sheep. Good guys, there they go. And much of those gains, as you can see, were made in recent weeks. Now, stockpiles are being cleared because demand is growing for China. The bonus is that the price gains are for all types of wool, so the benefits that benefits more farmers, and for consumers, that'll likely mean more choice.
Hopefully it's going to mean that there's some good woolen products out there, and I think that's ultimately where the industry wants to be, is having available products for purchase by consumers in store and ready to go. And I think targeting areas that are growing, such as the knitwear segment, which has seen over the last decade almost doubled in size.
To the Australian share market now, which for the 4th day in a row suffered significant losses. By the close, it was 1.4% weaker today. So far this week, shares are down 4.7%. The banks were once again the biggest drag. Ratings agency Moody's said Aussie banks' asset quality is stable for now, and that moves by corporate regulators to cool investor housing is actually credit positive for the banks. The miners were dragged lower, but the biggest loser was grocery store supplier Metcash, plummeting 18% after it announced big write-downs. In Japan, the Nikkei edged slightly higher. Shares on Wall Street lifted overnight, and on the commodity markets, both gold and oil are weaker. And for the first time in its 177-year history, David Jones will make its first offshore move, launching a store across the Tasman in Wellington. Now, remember, DJs was delisted from the stock exchange last year when South Africa's Woolworths purchased the company, and this move is part of its greater plan to become the biggest retailer in the Southern Hemisphere. Janice and Anne.
Thank you, Ricardo.